everyone. This is Shireen Purewal bringing you the latest real estate market update here in Canada, in Victoria, BC. Okay, what's been going on lately? The world, what's going on? Well, we recently heard, as of last week and this week, that the Feds, which is the US government that basically runs the global economy, has decided to stop quantitative tightening and start quantitative easing. What does that mean for us here in Canada? And what does that mean here for us here in Victoria, BC? Well, what this means essentially is they're going to start printing more money again. Yes, ladies and gentlemen, the US government is printing and printing and printing more US dollars. What happens are the Canadian dollar is pegged to is part of a basket of currency. One of the main currencies that determine the value of the Canadian dollar is the US dollar. So as they print more money and their money devalues, that automatically devalues our Canadian dollar as well. Now, the trick is this doesn't happen overnight. So when COVID, they started printing money, we didn't feel the effects of it or the wrath of it till 2 years later. So they've started these past 2 weeks. We will not feel the wrath of this inflation till another 2 years. So yes, oil prices are low right now. Yes, seems like inflation's a little bit better. The reality is it's coming. And for those of you who think gold prices have gone up a lot, it hasn't gone up high enough to make up for the amount of printing that's going on in the world right now in most economies. What does that mean for our real estate economy here in Victoria? What's happening in the world? Liquidity. Money is becoming hard to find. Money and valuable money, right? We can keep printing money, but valuable money isn't circulating in the economy. You've got Mark Carney that recently told us about his new budget, which is like spend. It's like Trump in his big, fat, beautiful bill. Let's spend. Why do they want to spend? They want to stimulate the economy. They want to get money going into the economy. They want to get everything up and moving so that it boosts now housing prices. It boosts your grocery shopping. It boosts. The more we spend, that's good for the economy. Now, we need a correction of some sort because we're just like in this bubble where we have a lot, and we never experience some sort of a correction. The real wake-up call for us in the real estate market is to wait till next year. 2026 is when those 5-year mortgages from COVID are coming up due. And we're seeing some layoffs happening now due to the recessionary environment happening as a result of this low money circulation and them trying to boost it now with pumping more. It's like drugs. Let's give it some more drugs. Let's pump it up. The reality is it's all leading to inflation. Yes. Inflation means what? Inflation means you need more money to buy the same apple. You need more money to buy the same orange. It means your money's losing its value. Gold goes up in value because gold is a form of value. It was the original currency that we moved away from, unfortunately. So that's why we got to move back to gold. Best thing to do in an inflationary environment is to hedge against assets that rise with inflation. Your real estate, your gold. Now, right now, there's a bit of a correction happening in the condo market because, again, it overshot. But in my opinion, with the amount of projects not coming up and the demand still increasing, we have to look back at the fundamentals in economics, which is demand and supply. We don't have enough supply, guys. And with all these developers now cutting down their projects, it's going to get worse. So if you see prices cooling down, or if you're seeing deals now, which we are in the condo market, in my opinion, if you can this year or 2026, get in there and pick yourself up some deals because it's going to come back again. Inflation, 2 years from now, boom, it's going to jump up again. You see, it's going to adjust for it. So you want to keep your money. If you keep cash in the bank, it won't adjust for it. It just becomes worth less. But if you put it into real estate or gold, it will adjust for that devaluation accordingly. Hence why the price of milk keeps going up. So, dear listeners out there, what's my 2 cents? My 2 cents is money's losing value. Hedge against assets that keep their value. You're looking at your well, the stock market right now is a bit in turmoil. Look at your safe, secure assets that you know aren't going anywhere. We all need your state, like we all need to go to Walmart, or we all need to go to Costco or whatever. What are those steady, stocks, or those steady, we all need a house in Victoria, right? In a school district. What are your good areas, your steady, good investment areas that you cannot go wrong in? Like your prime areas. It's like me buying a piece of property in Hollywood during like the worst time when no one was buying. At the end of the day, these areas are recession proof. In Victoria, we have recession proof areas where there's always demand. Talk to me. Let's talk. We can find you these areas. Same with condos. So what is Warren Buffett doing right now? He's sitting on a pile of cash. Go Google it. Why is he doing that? Because now he knows is the time to buy. So stay tuned, guys. In my opinion, those buying opportunities are coming up, guys. Hang tight. Sit on a bit of cash, but not for too long, because cash is going to lose value in 1 to 2 years as this spending catches up, this printing of money catches up. Love you guys. Thanks for following and thanks for listening. If you have any questions, drop your question in comments below. Always love to hear from you guys. Cheers.